Hey guys, this is Ryan with TrendLizard.com. For you gold bugs out there, it's been a long time since you've had a good buying opportunity on gold. Probably 2016 was the last time that you'd actually turn a profit buying this guy. It's had a rough 2018. It's tanked for most of the year. Since September, it's been chopping back and forth and trying to find a base. So it's an interesting point to look at gold. I think this is not too far from a good buying opportunity, but I don't think we're quite there yet. Nevertheless, I want to put it on your radar because I think there will be a great buying opportunity coming up soon, and it's something you need to have your eyes on because when the time is right, it's probably going to happen pretty quick and could turn you a very nice, tidy profit very quickly. So it's definitely worth keeping an eye on. And so we're going to go ahead and look at the charts there. We're doing this second video today. I already did one on Bank of America a little bit ago. But I'm doing a second one because I'm not going to be able to put out a video next week during the Thanksgiving week. Happy Thanksgiving, by the way. Nevertheless, let's go ahead and dive into gold and see what's going on, see where the buying opportunity lies. Here we go. So here's a look at the continuous contract of gold dating back as far as we have data, which is 1980. Had a rough go, obviously, back and forth many years into the 1999-2000 low, at which time it kicked off a very massive, very beautiful five-wave advance into the 2011 high. Obviously, things changed at that point, and gold has been suppressed since then. Here's the bad news. The pullback that started back in 2011 is not yet over on gold. It is going to continue overall. However, there looks like there's going to be a good buying opportunity in the interim that should turn some pretty good profits for you if you can time it out right and get in. But again, on a long-term time frame, I think it's bullish overall, but I don't think this 2011 pullback is over. I think you're going to see it move closer back down to the lower end of this yellow support around 900, and that's what the Elliott Wave pattern is telling us. So let's go ahead and dive in and look a little bit closer at what's happened off the high here. This takes a look at the move off that high. You can see that it looks like the first leg off of that high was actually a five-wave move. Since the low was recorded back in late 2015, it's been in this really choppy, rough advance since then. This is where the buying opportunity lies. It doesn't look like this recovery is over yet. We expect it to at least move back to the highs that were tested back in 2016, again in 2017, and again in 2018. I think you're going to see a strong move back up there, probably above that before there's a high to this recovery and before the pullback off the 2011 high occurs. So I think that's what we're looking at. And so let's go ahead and continue to zoom in here. This takes a closer look at that recovery off the late 2015 high. This is why we don't think it's over. There was an initial up leg here, very sharp. Since then, it's been heading sideways. This is a pretty clear indication that there's going to be another sharp up leg to give us that nice three-wave move that we look for with counter trend recoveries like this. So far, we only have the first wave, wave A. We're in wave B right now. We're still due for a large C wave up, which again should be a pretty substantial move. So that's what's coming up. It's not there yet. There's still going to be a little bit more weakness before we get that big up leg. But once we get a new low, probably below the 2018 low, I would be on guard. I would be looking for a good buying opportunity because we should get a really nice shot up. Probably going to be pretty sharp, something like what we saw in 2016. That should take us to a new high for this recovery. So you're talking 20+% on the recovery, and that's something that's worth your time. So that's what we're looking at. We can look at it from a couple different ways. Something else we can look at here is the Gold Miners ETF, GDX. This shows you why we think the low is not quite in yet. The recovery off of September's low is a clear counter trend three-wave move. It's breaking down again. This is a clear indication that that big up leg that we're looking for is not yet happening. That's why we're looking for a move below September's low before gold is in a position for it to take off. So a couple other ways we can look at it. Here's the ETF that we track on a daily basis at TrendLizard.com. GLD, it's just the Spiders Gold Shares ETF. Shows us the same thing. It shows that it gave us a really big up leg back in 2016. It's been in a chop lately. The recovery effort off of September's low tells us that the pullback is not yet over. We might get a test of the late 2016 low before it's ready to go. So we are expecting a bit more weakness in the near term. But once it reverses back up and starts showing us some trendy, purposeful strength, I think you want to get involved. We're going to look at it a couple other ways. It takes a look at GDX on a little larger time frame. Shows us the same thing, really sharp up leg and then a counter trend pullback that should lead to another sharp up leg in the near future. We're finding the same thing when we look at the junior gold miners ETF, GDXJ. And so I'm just trying to show you, we're looking at it from every different angle, different ETFs, different ways to trade gold. All of them are telling us the same thing. It's getting closer to the end of the pullback that's been in play. And once we get a new low, that should put it in a position to really shoot off to the upside. So I would wait for a new low. Once you see that and then you start seeing some purposeful strength, I think you want to be a buyer in gold and try to ride it back up to the strong up leg that's going to move above the 2016 high before this recovery completes. So I hope that's helpful. We trade gold every day at TrendLizard.com, or at least we analyze it, tell you when to trade it and when not to trade it. It's very helpful stuff, and that's what we do. Come visit us at TrendLizard.com, and I will talk to you soon. Take care.